Welcome back again. This is the Captain Gala FX. Now, today we are on the third episode of the market structure, but we were to talk about the supply and demand. But uh, before that, I want us to do what we call top-down analysis, so that you can be able to basically understand and know what top-down analysis is, so that it can help you to do everything about trading, so that you can be able to know very many things about trading. So this is what is top-down analysis? Top-down analysis is basically, before we go into the video, make sure you like that video, comment, subscribe, and share. And again, you can always DM us for account management. The link is, the WhatsApp number is on the bio. You can DM us for copy trading with the exam. And again, you can also DM us for professional account management and mentorship. Now, what is top-down analysis? Top-down analysis is basically analyzing the market from the higher time frame to the lower time frame. So it is called top-down analysis. Now, top-down analysis helps you to analyze the market basically from the higher time frame and to the lower time frame. It helps a lot during trading, because uh, what we always say that when you want to trade the market, you should always be in the right side of the you should always be in the right side of the market, which means you should always concur to the trend and direction of the market. Now, what is the importance of top-down analysis? Helps in helps in identifying identifying the trend of the market. That is one. Second, it helps in a breakdown of strategies. Helps in breakdown of the strategy. Another one, it helps in getting or spotting a sniper entry in the market. Entry in the market. Now, top-down analysis is in the market. Now, top-down analysis is one of the best approach you can also give, combined with the market structure and everything, because it is a part of the market structure. Now, top-down analysis will help you with a lot of things. Basically, it is identifying or checking on what the market is doing on the higher time frame vis-a-vis what the market is doing basically in the lower time frame. That is what we call the top-down analysis. Now, what do we do? Basically, if you, let me say you are somebody who wanna use top-down analysis to analyze the market, and it should be basic for everybody. Top-down analysis should be basic for everybody. Now, where do we start? We start analyzing the market from the monthly time frame, monthly time frame, to the 1 hour time frame, or even to 15 minutes for sniper entry time frame for sniper entries. That is it. So this is uh what we always do now. This is the sniper, the top-down analysis. Now, let us see Let us get an example. Now, an example of this, let us take an example of gold. Let us analyze the market of gold using the top-down analysis approach. So, we'll go to the monthly time frame. If you check on the monthly time frame, the market is under rejection on the monthly time frame, and again, you can see the market is very, very bearish. On the monthly time frame, you can confirm that. On the weekly time frame, you can confirm the market got a very strong rejection, and now we are on bearish trend. You have confirmed that we are now bearish on the market. You can see again on this, the market had a very, very impulse sell. Now, remember we are having something called the unmitigated or the demand, which was not taken out. This demand here, which means we expect the market to sell to 46.61. Which means our trade zone is from that zone to that particular zone. So we expect some sales from that particular zone. So you can see on the lower time frame, you will always see that this is where we marked is a representation of a liquidity, and the trend of the market is a sell. Now, what we'll do, we'll come and mark. Now, this is the unmitigated demand, which means this demand is too clear, and we said that this demand was never taken out. And I told you that for a proper market, both the sellers and the buyers must take place in any market movement. So we expect both the sellers and the buyers to take place. And here, the last thing we saw was the buying pressure, which means the sellers did not trade into this particular market. So I want to see the sellers trade into that particular market. And again, according to the market structure, we had what we call double top, and another double top was here. So we had another double top, and this double top, as I always tell you that with that double top, we are having now what we call an M pattern. You can see this M pattern, which means we expect something like this. With this one also, we have another M pattern. You can see this M pattern. So we expect something like this one. So that is what we expect on M pattern. Now, according to top-down analysis, this is what we expect on the top-down analysis. Now, let us go to the 4 hour. Now we have known that gold should be selling to this particular zone. So are you seeing the way top-down analysis works? Because we have confirmed that this is basically a representation of a liquidity, which means a lot of orders were left here. So if you analyze the market on the 4 hours, if you were to trade on the 4 hours, the market should come to this particular zone to give you maybe a buy if this zone holds as a demand. But for now, you have to check on the market, which means you have to check on only the buy, the sell in the market. So let us go. It is very, very evident on 1 hour. You can see that, and now we are having the market restressing. So we are looking at the possible entry points so that we can clear this liquidity zone around 46.60, so that the market can tap this particular zone around 4500. So with that, I expect the market to tap 4500. After that, I expect this demand to actualize so that it can give me another pattern, which means this is a supply which was never taken out. The market should come for this supply to create new high of the all times. Now, what we need to do is basically the market should be coming here. Does that. This one should be our neckline, and now this should be our demand, so that we can get that. This is one of the reversal patterns I will be training you, which means according to the pure price action trading, this is a demand. Now this market should be buying from this particular zone to 55.96. That is how this market movement, the market movement we should be experiencing that particular zone. So we should be experiencing the market should be selling to this particular zone to tap that zone, so that it can give us a reversal pattern on the same and give us a buy to around 55.83. So you can see the top down analysis is so clear. It can give you both the trends. When the sellers are done, we will be getting buys from that particular market. Now, let us check on the 15 minutes time frame. So, basically, you know very well that, let me show you. Basically, you know very well that we are now selling to 4,500. Now, where do we get now the entry point? Let us go to the 5 minutes time frame. We check on the possible supply zone. Now, if you can see this, the market is having a lot of chaos here, which means there's a lot of chaos, and we have something like a very, very good supply around this particular zone. And we also have another one here, representation of a liquidity. So we don't know should the market suit that, because we have a demand here and this is a neckline. Now, if the market is actually going for that demand, so we should be waiting for the market to come and sweep these liquidities, so that, because you can see the last candle before any market movement, this is the last candle that the market actually did. So this is you can mark it, all of it, because now that is a zone. That is a zone. It is acting as a bullish order, bearish order block zone. So I want to see the market come to this particular zone. If basically it should actualize our trade, if it actualizes our trade, uh, the market should take that. Now, once it takes that, if you check it on the 1 hour time frame, let us check on the 30 minutes time frame. 30 minutes time frame. Now, this is the thing. Now, this market should be selling up to around 4,500, because we had done a top-down analysis on the same. So our top-down analysis tells us that we should be experiencing a sell up to this particular zone. That is how top-down analysis is done. We are now having the entry point. We have seen the entry point. So now our take profit should be at 4,500. 4,500. That is the take profit. Now, anything that happens from here, we have to get a reversal pattern. If the market actualizes this demand, which means we are going now to buy up to this particular high, which means we'll have to, if this market comes to this zone, which means for now we know very well that this market should be selling and dropping to this particular zone. So once it drops to that zone, we expect actualization of this demand, or if not, we expect a sweep of this liquidity, because that one represents money, so that it can actually tap that another demand which is below it around that particular zone. If it doesn't hold, we expect a sweep, so that this market can give us something like this. A sweep of that zone will give us a tap of this demand. Now, a tap of that demand will still give us what we call a W pattern. The reason being, you can see we still have the neckline still remains. So that is something we are still expecting. Now, top-down analysis is the best. Don't ever analyze any market without top-down analysis, because without top-down analysis, there's nowhere we are going with such markets. So, top-down analysis is the best. It is the best approach to trading Forex. There is nothing we can beat top-down analysis. Any day, anytime, if you're somebody who wanna do Forex, always work on the top-down analysis. So we expect gold to come to that zone. If gold comes to this zone, basically we are going to sell massively from there up to 4,500. There was a sell we were to get from this zone, because this one was a liquidity sweep about that particular zone, and you can see the structure. That one was a double top, and the market gave us some good sales. Now we expect another rally to this zone, and a sweep of this low will give us a TP1, then TP2. So you will do layering as the TPs go on. Now, don't miss our next episode. I'm going to do what we call, or you can comment so that I can analyze another pair. You can comment so that the pair you want me to analyze using the top-down analysis, which you can trade for the rest of the 2 months. Which means top-down analysis will always help you to know the direction of the market, even in the coming 2 months, 3 months, and everything. It is very good, and it is very easy to take in. And always know that when you're doing top-down analysis, if you find out that the monthly time frame is selling, weekly time frame is selling, and you find out that the daily time frame is buying, you should wait for the daily time frame to start selling, or look for entry of a sell on the daily time frame, because all those time frames must align. Without alignment on those time frame, that top down analysis is invalid. All the time frame must align, because and remember, the higher time frame, the stronger the setup. That is something you have to know. The higher the time frame, the stronger the setup. Because once you catch the trend of a market, you're good to go. That is the best thing that can ever happen to you in this forex industry. If you have any question, my WhatsApp number is gonna be pinned below. And if you have any comment, you can comment so that we can know it. If you have anything to do, want anything to do with account management, if you want anything to do with account management, anything to do with copy trading with Exam, because I offer the best. I am a strategy manager at Exam. I will always help you a lot. Now DM me on the WhatsApp number which is on the comment section so that we can do this. Bye bye and see you next time. Adios.